Good morning, everybody. Thank you for being with us. This is one more session on this series of webinars that we've been hosting here at the Latino Chamber of Commerce. Thank you for being with us this morning. Today we have a great team of experts that will provide some very, very important information for us to be ready whenever we want to do some property investment, some real estate decisions that we need that any business can make. This will prepare you on that. But I wanted to introduce you first, Luis OLVERA, who has been the person that has been coordinating all the series. And I'm just gonna give you a little bit of what his background is, and then he's gonna introduce our guests today. So Luis is a Minnesota residential and commercial real estate agent, and he's been acting for over 15 years. He's been a past director of membership at the National Hispanic Real Estate Professionals at the Twin Cities chapter, that is NAREP. Luis has over 18 years of experience in international business, contracts, negotiations, development of subsidiaries, exports, imports, and I can spend a half an hour talking about Luis today, but I'm going to stop it there. And I'm going to let Luis introduce our expert today. Luis?
Thank you very much, Fabio. As always, an honor and a pleasure to be able to participate in this commercial real estate series of webinars. We have now a very, very nice number. This is the 22nd webinar that we are able to participate in. And today we have a very, very special panel of keynote speakers. First, I would like to introduce you Brent Hedrick. He's a small business administration lender at Associated Bank. He has only 2 decades of banking experience. He studied at Colorado at the Graduate School of Banking. Brent is passionate about helping small businesses and takes very, very big pride in finding creative solutions to help businesses to obtain the proper financing. He is a very good source for owner-occupied real estate, franchises, lines of credit, working capital, expansion, tenant improvement, construction, acquisition, and partner buyouts. He is a really, really very good source for financing for you guys. On the other hand, we have also a very, very important keynote speaker. His name is Jason Krause. He is really understands really the challenges that entrepreneurs face when launching and growing a new venture. He has been a lawyer, and his extensive experience is focused in legal in the business fields, and he provides the clients with a unique insights that many attorneys do not possess. He has been navigating roadblocks, large and small businesses, and he comes from unexpected places and unforeseen times, and he brings a practical solution-oriented approach to his practice. He is passionate about helping people achieve their visions and overcoming challenges with innovative problem solving. So without further ado, I really would like to introduce our first speaker again, Brent Hedrick, who is going to tell us how to navigate with these SBA programs and so forth. So Brent, the scenario is all yours.
Fantastic. Thank you for that amazing introduction. I really appreciate the opportunity to speak in front of you all. Thank you so much for letting us come in and tell you a little bit about what we do in the SBA program. Certainly hope that I can provide some value for you today, as well as I hope to be a resource for you in the future if you have any needs. But let me bring up my presentation that I wanted to share with you regarding the SBA. Okay. So as Luis mentioned, I'm an SBA lender with Associated Bank. And I have recently come from Colorado, where I was doing business banking over there, and so I'm a little bit newer to the market. Still learning a lot about the market, but I'm excited to be in the Twin Cities area and to be helping businesses with SBA lending. First, I wanted to just talk about what SBA lending is. It's a government lending program for small businesses. SBA partners with lenders to help increase small business access to loans by providing a guarantee or loss share. So as you may or may not know, in a lot of cases when SBA does lending, it's for small businesses that couldn't get conventional lending otherwise, or there's some sort of benefit to working with the SBA. The government is pro small business, and so they want to help small business to gain financing in situations where they wouldn't be able to get conventional financing. So it's fully a government program. The SBA has several different products that they offer. And so as you see there, the product set. So there's an SBA Express, or kind of a small loan option, and that's for loans up to 500,000. In a lot of cases, banks or preferred lenders will have kind of a what we call fast track process, meaning an easier gateway to getting smaller amounts of financing. That one is really, true small business lending. The next level up, and probably the most common, is the SBA 7A term loan. So those, we can do loans up to $5 million. Those most commonly are on a 10-year term. So you've got probably a longer payback than what you would see in a conventional loan. So oftentimes for acquisitions, equipment lending, things like that, typically, those conventional loans might max out at 5 or 7 years, where the SBA is going to give you up to 10 years. So that's the most common SBA loan. The other SBA loan is the SBA 504. And that's usually for larger purchases, either real estate, construction, heavy equipment. The times that we typically will utilize the 504 is in amounts greater than $1 million, and typically tied to a larger piece of collateral, real estate or equipment. So the kind of the bottom segment there, the customer profile. So, we're looking to help businesses that are for profit, headquartered in the United States, and ownership is U.S. citizens. 99% of all businesses in the United States meet the SBA definition of small business. So there's so much opportunity, so many businesses we can help. And it's really suited for business looking for longer terms, lower down payment, or lacking collateral to support the loan request. Again, where conventional lending isn't an opportunity, the SBA steps in. So the SBA has a really great resource. If you haven't been to their website, the SBA website has a lot of things in it. And so if you're trying to decide what avenue is best for lending, where you should start, how you should be prepared, there's a really great resource out there on the SBA website, and it really helps you to, starting from the top there, plan your business, launch your business. How do you manage? How do you grow? It talks about how you can secure funding. You may or may not know the SBA typically doesn't lend themselves. So they work with a partnership like a bank, like Associated Bank, where we make the loans, and then we get the SBA guarantee approval, And we really manage that relationship, but it's the SBA that is doing the guarantee. So if something were to happen with the business and it doesn't go as well as expected, then the bank is made whole through that SBA guarantee. But we are a preferred lender, meaning that we underwrite to SBA specifications. We look at the SBA policy to make sure that we're within their lending policy, and we make the loan with the SBA backing. This again is just a breakdown of the types of loans that SBA, that you can actually receive through the SBA. So again, the SBA Express option, which is typically, going to be for short and long-term working capital. Those, if you were looking to, say acquire a business vehicle or, make some sort of, tenant improvement, but on the smaller side, there's a kind of a myriad of different, uses for those funds. But again, typically going to be a little bit faster turnaround. The process is a little bit more streamlined than, kind of going through the full process. The SBA 7A loan, we can do both the shorter terms and the longer terms out to say, 25 years on a piece of real estate. We can refinance existing business debt, which is something that really hasn't been available for a long time, and actually within the last few years came up. So if there's existing business debt that you might have a high rate on, or if the terms aren't as favorable, that's something that we can look at refinancing. And then if you need to purchase furniture, fixtures, supplies, more working capital items, that's something that can be utilized through an SBA loan as well. Again, the 504, we can do fixed rate financing. It's going to be, typically a longer term. So again, usually tied to either a heavy piece of machinery that has, a long lifespan, or real estate. Can also be construction, things like that as well. So a little bit of information on lending for working capital, because I think, there are oftentimes opportunities in business where maybe you want to acquire a new book of business, maybe you want to add additional employees, maybe you're expanding your business and you just need capital to carry some of those expenses, things like that. This is an opportunity for you to potentially get funding for that. So the uses for working capital lending, I've got a list there at the top. So rented utilities, managing payroll, purchasing inventory supplies, covering cash flow gaps, marketing campaigns, seasonal hiring. Those are all good uses for working capital lending. The 7A short-term line of credit is an option for that. Now, a short-term line of credit typically is going to be a year or less, even though it's a revolving line. Typically, the amount has got to be repaid within a year, and then you can redraw it. Or long-term financing options, again, out to 10 years. The working capital section of SBA lending can be included as part of an acquisition or a build-out request. I'm currently helping a company right now that is doing a build-out for a larger space, and some of the eligible funds that we're giving them are going to be related to filling inventory, paying operational costs as they gear up for a grand opening. And then the loan size is oftentimes based on historic business financials, invoiced amounts that you might have if you're budgeting a certain amount, or business projections. I listed a best practice there at the bottom. So outlining a budget of funding needed and potentially creating a projection to display the financial benefits from the funding. So if you've got historical financials and they don't necessarily take care of the debt payment on working capital loan, it's possible that we can utilize a projection document to show what the business will create in the future? What do you expect it will create in the future? If you're adding a new sales team and you expect that your sales figures are going to grow and it's going to make the business more profitable, but you don't have necessarily the upfront capital, something you need for the business, we can show our credit team, and we can show the SBA that you show that there's going to be a benefit, a future benefit, and we can utilize those projections in getting a loan approved. One thing I thought I'd also touch on is SBA equipment lending. When you're looking at a piece of equipment, it's important, I think, to gather an estimate of how much the equipment will cost that you're looking at. I think it's important to include additional costs for shipping, any type of taxes you'll be paying, cost of installation, because oftentimes those can be financed in the loan itself. Again, I think it's important to project what kind of growth, if any, you're planning on experiencing from adding additional equipment to your business. Will it increase your production? Will it lower your costs? Will it increase your speed to market and thus make you, more profitable? I think it's important to highlight those things when you go through your SBA lending application. Again, the SBA lending allows for longer amortization than other loans, where again you might max out at 5 or 7 years on a conventional loan, where we can get you a 10-year term, potentially let you or help you keep more cash in your pocket from a cash flow perspective on the business. The 504 loan, again, heavy equipment, heavy machinery, large purchases, things like that. And then what I've seen in the past with SBA lending is that, if you're looking at a piece of equipment, and I know often the idea is, should I buy a used piece of equipment? Should I buy a new piece of equipment? What's the lifespan? All of those things are thoughts that go through your mind oftentimes as a business owner. And what I think is a benefit to the SBA program is, one, the longer amortization, so like I said, allowing you to keep more cash flow in the business. The other is, maybe you can afford a slightly more expensive machine because, one, we're taking it out on a longer amortization, but we're also, the debt service requirements through SBA are a little bit narrower than they are with conventional lending. So if your business doesn't cash flow the request at 1.25 times debt service, the SBA minimum debt service is 1.15 times, which could potentially give you a larger budget. Eligible and ineligible uses. I wanted to share this. I think this is really important. When you're thinking about SBA lending, there are types of loans that fit and types that maybe don't fit because of policy or other reasons. So I'll start with what's eligible. Changing ownership, acquisition, partner buy-in, partner buyout, those are all eligible expenses. In fact, I just closed on an acquisition this morning. So definitely one that we can do. Lower equity commitment. So again, when you're looking at real estate, oftentimes conventional lenders are going to ask for 20% down in cash, or maybe 25% down in cash. The SBA really only requires 10% down, so you can keep more money in your pocket. Or if you think that maybe I won't be eligible because I only have 20%, you could get by with doing as little as 10%. If there's a collateral shortfall, so oftentimes in the case of acquisitions, when you're buying a business, oftentimes those businesses don't have full collateral coverage. And so what the SBA does is it allows for a gap in collateral coverage between the business. There may be additional assets out there. If you own a home and you have equity in your home above 25%, there are other ways to shore up that collateral shortfall. But typically in conventional lending, it's not something that you could get done. Whereas in SBA, we can look at either a primary home, secondary home, or potentially life insurance to make up that collateral shortfall. And then, the SBA oftentimes will work with business industries that aren't as desired in conventional lending. So, when you think about higher risk businesses, sometimes, restaurants, hotels, gas stations, things like that. Those are areas where, an SBA loan is, a better fit than it would be conventionally, just because of the risk associated with the business type. Ineligible uses for SBA proceeds. Investment real estate is one. If you had a building, let's say hypothetically you bought a building and a portion of that building was going to be leased out, but then you were going to operate your business in the other portion of that building. As long as you take up 51% of the square footage of that building, it's not considered investment real estate. It would be considered owner occupied. So that's an area that we can help. If you buy a building and you plan on operating your business in there, but let's say you only utilize 40% of that square footage, it would be considered investment real estate at that point and wouldn't be a fit for SBA. Nonprofit companies, unfortunately, SBA doesn't lend to not-for-profit companies. So, any 501c3, churches, things like that are not a good fit for SBA. Businesses that lend money. So if you operate a business that lends money, it's ineligible. Passive business ownership. This one's kind of interesting in that if you buy a business and you don't intend to operate the business. So let's say you buy a business and you're going to hire someone else to operate the business and you're going to be a silent partner, then that's more of a passive business ownership, and that doesn't fit the SBA box. Gambling or other illegal activity, not something that fits in the SBA box. And then borrowers with recent bankruptcies or criminal history oftentimes are ineligible for SBA financing. It's really important to have someone, as I listed there on the bottom, that knows SBA lending, that understands the program, and can really help you guide your way through the process. And can be that resource for you. These are kind of the optimum elements of a strong SBA financing request. So initially, what we do is we bring in historic financials of the business that you're operating. We take a look at the debt that you're looking to acquire through the SBA, and then we want to make sure that you have cash flow in excess of that 1.1 times debt service coverage, meaning that your business doesn't produce just dollar for dollar enough to pay back the loan. You've got a little bit more on top of that. So that's the 1.15 for debt service ratio. Again, we can go after longer amortizations to help you with cash flow. We want to see the cash flow in a business trending in the appropriate direction. So in a situation where you've got a business, if you're seeing declines in business revenue and net income year over year, that could be a difficult position to get SBA financing. Typically, in the case of an acquisition, experience management, 3+ years of relevant experience. The SBA likes to see that if you're going to acquire a business, that you've got some sort of relatable or relevant experience. That really helps in the process, because then the SBA feels comfortable that you know how to operate that type of business and you understand that type of industry. Growing or expanding a company or industry with creditworthy personal guarantors. So it's important that if you're looking for financing through the SBA or anywhere else, really, that you've got a decent credit score. You don't have late pay showing up on your personal credit, things like that. So having your credit as clean as possible, and if it's something that you're planning for, maybe you start to think about that today, right? What does your personal credit look like? Do you have any planning? Are there things you want to pay off to get yourself ready for that to grow your personal credit? positive tangible net worth. So if you're a borrower and you've got, let's say you're acquiring a piece of real estate and you've got 10%, maybe you've got a little bit more than that for, what ifs on your business, right? It's going to cost to move. You've got additional expenses now, taxes, and someone to scoop the driveway, things like that. So just having some additional funds, is always a good thing when we're looking at credit, SBA credit opportunities. And then just making sure that you don't have a lot of leverage out there. Meaning, if you've got a lot of lending already, kind of shoring that up ahead of your application. If you've got things that are going to pay off in the next year, it's possible that maybe we don't include those as part of our calculation. But we just want to make sure that we're not lending to businesses that are already pretty leveraged from a lending perspective. And I think this is my final slide. So this is kind of the core initial package that we would look at for when we start assessing and evaluating a SBA loan request. So typically we're looking for 3 years business tax returns. If the business is up and running, we can look at franchise opportunities, and typically, we're looking at, if it's say a startup franchise, we're looking at the history of that actual franchise company, and what does their history look like. We're probably going to evaluate their financials, and other businesses that are very similar to the one that you would be, producing. But typically on a active business, 3 years business tax returns. Interim business financials, in a situation like today, we're in October, we'd probably be looking for financials through the end of September, if not year to date. And then projections. I think projections are important, especially when that loan amount grows to, somewhere around $1 million, maybe over $1 million. We really want to look at the projections, as well as in the instance of an acquisition, we'll probably ask for projections as well. Current business debt schedule to understand, what the business currently holds in debt. Current personal financial statement. So, you as a borrower, guarantor, typically any owner of a business with 20% or more equity would need to be a guarantor. And we typically like to know what their financial picture looks like. 3 years personal tax returns for any of the guarantors, and then, getting an idea of what the purchase agreement, letter of intent, if you're buying a business, or business plan looks like as well. So that's kind of a good initial place to start. Oftentimes there can be additional items that we ask for, and there's always questions once we have financials and start to review those. So that's an overview of SBA lending from where I sit. One thing that may be worth noting as well is that if you are operating a manufacturing company, as of October 1st of this year, any SBA loan request for a manufacturing company up to $950,000 will have a SBA guarantee fee waiver. So it is temporary. It's something that just started up, so it'll go on for a while. But if you're looking at SBA lending and you own a manufacturing company, there's a chance that you'll save some money on the front end. So at that point, I'll stop and ask if there are any questions you have about any of the information that I shared, or is there any questions outside of that I can help answer?
Brent, I think there is one question posted in the chat, and it says, how does SBA view or assist with turnarounds? Well, I'm going to start here. Turnarounds take time to complete. How
Yes.
does SBA view or assist with that?
Yeah. So I did look at that's a great question. I did look at a business like that recently, where they were in a situation where it was going to be a partner buyout. There was friction between the two current owners, And so that was causing turnover in staff. It was, having an impact on their revenues. The turnarounds do take a little bit of time to complete, but what we really want to see is stability in the company. I think that's most important, right? If the business is on kind of a downward trajectory, it's good to see, you've identified changes that you've made in the business to correct that trajectory. And if that is something that is stabilized, that's really the most important piece, right? Because if it's in, kind of a downward trajectory, it's going to be hard to say, yeah, we feel confident that the business is moving in the right direction, that sort of thing. So I would say probably, that stabilization, maybe at least a half a year, probably a year or more is most likely what we'd like to see from a lending perspective. You don't have to be moving on the upward. We just want to make sure that we're not continuing to degrade that business. Any other questions that anyone has? And again, I appreciate the time. I'd love to be a resource for you if y'all have any questions. I've been doing business lending for a long time, and would be glad to be a resource.
Okay,
All right.
thank you.
That may
Thank
be
you,
it.
Brandon. I think it's Jason's turn, right, Jason?
What's that?
Now it's your turn. So
Yeah,
take
now
it
it's my
away.
turn. I'm ready to go. Brent, that was great though. Thank you for that. Really taking a lot of information and putting it together in a very clear and presentable way. So, nice job with that. And I have to get a copy of your presentation after this because that'd be really useful for me and for my clients. So thank you. Luis, Fabio, everybody at the Chamber, thanks for having me today. It's a pleasure to have this opportunity to speak to everyone. Well, first of all, my name is Jason Kraus. I am a business attorney with Seiler Law. And whereas Brent was doing an overview of SBA, I am going to talk about some very specific rule changes that occurred this summer. And here I'm just trying to, can everybody see my screen? All right, great. So I'm going to talk about some very specific rule changes that occurred this summer. And it is no question why the changes were made and who they are intended to affect. And so we'll get into that. And what we're going to talk about are opportunities that you still have or that non-citizens have to participate in SBA businesses, even though on the surface it doesn't seem like that's a possibility with these new rule changes. So, Brent, you might want to turn off your camera, take a long bathroom break, pretend like you're not here, because these are not things, what I'm talking about are not things that are going to end up on the documents that Brent sees. They're going to be behind the scenes in terms of how you're structuring things with your partners. So, beyond that, let's get started here. So beyond the SBA loan, how non-citizens can be part of the dream. And also in terms of questions, I might be rare for an attorney in this way. I don't love hearing myself talk. So please feel free to jump in with questions at any time. I'm happy to stop the presentation, answer any questions, and then come back to it. So. All right, so what changed in 2025? Well, in May, I believe, May, June of this past summer, and Brent, as the SBA expert, you're welcome to audit my presentation at the end here. But this past summer, May or June, the SBA rules were changed, whereas previously a business could have 51% ownership that was held by U.S. citizens and 49% that was held by non-citizens. So just had to be a majority owned by a U.S. citizen. Now, 100% of ownership has to be held by U.S. citizens, nationals, or lawful permanent residents. And before I give some of you a heart attack, this only applies to new applications for SBA loans. Right, Brent? Nods?
Yeah, that's correct. It doesn't apply to loans that are already in place.
that are already in place. There is, we'll talk about this towards the end more, but there is a scenario where if you are going back to get additional SBA financing, then it becomes a concern. But if you have a business in place, you have an SBA loan in place, and you don't intend to go back for further SBA financing in the future, you don't have to be concerned about this. This is for new applications for SBA loans. So new business owners, entrepreneurs. So as I said, no ownership is allowed by any non-citizens. And as much as I do not like these rules and the spirit of these rules, I do have to say that they were somewhat thoughtful in the way that they put these together, because they extended it. They knew that people were going to attempt to find ways to get around it. And so they've extended it to include not only the owners, but key employees within the business. But we'll talk about how we can still try to get around that. So key compliance rules. Non-citizens are not on the LLC, the governance documents or the loan documents. The role of the non-citizen must be non-managerial. Non-citizens cannot make major decisions or control finances. And another big one is compensation can only take the form of wages or bonuses. It can't come from distributions because, of course, then that would be ownership. So what does this mean? This means non-citizens cannot own or control SBA funded businesses, but like I've been teasing, can still participate. Might not be on paper officially with the SBA as an owner, but there are still ways to essentially create a partnership, have an equity interest, and assure that in the event of a sale of the business, that equity interest would be protected. So we're going to focus on how can we avoid ownership and control while rewarding that contribution to the business. And the way that we could do that is by coupling two legal documents. One is a phantom share agreement and then an employment agreement. And we're going to make sure that, again, eligible owners are the only ones that are on any official documents, that non-citizens are contributing expertise or effort, sweat equity, that they're not contributing any financial aspect, and that their compensation is only going to take the form of salary or bonuses, and then that equity interest is protected in the event of a sale. So what is a phantom share agreement? Phantom share agreements are not something that only come along every October and Halloween. And if you didn't know I was a dad, now you do. A phantom share agreement is a way to reward someone for helping a business grow without giving them actual ownership or voting control. It mirrors ownership benefits like bonuses tied to profits or sale proceeds in the event the business is sold, but the person never becomes a shareholder or member. So quite often, these types of agreements are used with ongoing businesses where they might want to reward or incentivize an employee who's been a valued member of their organization, but they want to make sure that they're giving them equity, but they don't want to give them any control over how the company is operating. And so that's typically how a phantom share agreement is used. And we're going to use it similarly in this case. So here's the example scenario. You have three partners who want to start a business. Two are U.S. citizens. One is a non-citizen. So we're going to have the two U.S. citizens appear on the loan documents. They own everything 100% as far as the SBA is concerned. That non-citizen is going to provide sweat equity. And then the non-citizen, we're going to have an employment agreement with the company and a phantom share agreement with the company. And we're going to be sure that when we do that, we're very specific about the titles that we give them and how we define their roles and responsibilities. We want to make sure I have director there in quotes, and it's in quotes because it doesn't have to be director. We want to make sure it's not a manager. We want to make sure it's structured in a way so that even though this person is providing the company with valuable expertise and effort, They're not, it doesn't look like, at least on paper, that they're acting in any kind of managerial or control way. So, key points. Again, this is a contract. It's not ownership. The company still remains 100% owned by its listed members. The way that the equity is protected is that these phantom share agreements, there are triggering events that then kick in that equity share. And so in this case, or most likely in a case like we're talking about where somebody wants to create a business, what we would have is we'd have that triggering event be the sale of the business. So on paper, you have the two owners who are 50-50 owners, and then they would make an agreement with the third partner, and their phantom share agreement would say that that third partner has a 33% phantom share interest. Now, again, that interest only exists on that document. It doesn't exist anywhere else, and it doesn't give that employee any control along with the interest. But let's say that these rules persist for another decade. Let's hope they don't. But in the event that they do, you start a new business now, and 8 years down the road, you decide you're going to sell the business. At that time, when the business is sold, the bank is going to give, or not the bank, but the purchaser, the buyer, is going to give the money to the sellers, and that'll be those two 50-50 owners. But then those 50-50 owners, because a sale has now occurred and you have this underlying phantom share agreement, that's the event that's going to kick in that phantom share equity. And so now those owners are going to pay the third partner their 33% out of that phantom share equity. Hopefully this is making sense. It is complicated even for attorneys, these kinds of agreements, and there are a lot of attorneys who really aren't familiar with them. So again, equity protections provided, no control, no voting rights. We're SBA compliant because the person with the phantom shares doesn't have any ownership or control. And then it can be a flexible design. The way I'm proposing it and the way I think most partners would want it is to have that triggering event be the sale of the company. But you could also have years of service or profit levels. I think that in terms of any kind of bonuses, you definitely want to keep that in the employment agreement outside of this phantom share agreement. So common mistakes to avoid would be giving non-citizens managerial or officer titles, letting them sign contracts or checks, using any kind of ownership language in any of these documents to refer to them as a partner or a member, and then paying distributions instead of wages or bonuses because that's only for an owner or a member. So key takeaways, and this is going to be somewhat redundant, but they are the key takeaways. So SBA forbids ownership control by non-citizens. So we want to make sure it's 100% sticking with the eligible persons. We're going to put together we're going to combine the phantom share agreement and the employment agreement to make sure that the structure is compliant with SBA and also protects the interests of that non-citizen. Going to make sure that the non-citizen's role is defined very clearly and keep them away from anything that could be interpreted as manager or control in the day-to-day. And then again, compensation, we're going to focus on wages and bonuses and not distributions. So final thoughts here are that despite these rule changes and the attempts to limit participation by non-citizens and essentially the American dream, entrepreneurship, you don't have to abandon those dreams. You can still participate in a partnership, essentially have ownership in the event that you have a sale. Just have to get really creative about it, have to make sure that the documents are written in a way that they are clear about how everything is going to function between you and essentially your employer, the company, and what events will occur that could kick in your equity interest. and of course have to make sure that everything is compliant with the SBA. Proper structuring protects everyone. And one thing I want to say here that's not strictly legal in terms of the documents, but is essential from an operational and common sense standpoint, is since you are not going to have any official control with the day-to-day of the company, if it hits a growth cycle, if it's hitting hard times, you might have you might be able to talk to your partners about what's happening, but officially, they're the ones who have the control over everything that happens with the company. So if you are going to engage in an agreement or agreements like this, similar to this, you've got to make sure that the people that you are entering into this business arrangement with are people you really trust and have a strong relationship with, which that goes with any kind of business, of course. But because we can't do some of the traditional things we would do as lawyers drafting these documents to give you the rights and control that would be similar to your partners, you really got to make sure that you feel confident about the people you're entering this venture with. And of course, always document things clearly and review with trusted counsel like myself. Because again, these things they're very, very, they're difficult agreements to draft properly. I know people have, especially new entrepreneurs, where, you've got a shoestring budget and you're not budgeting a lot of money for legal. We have AI. There's a lot of people who like to attempt to draft agreements using AI. Maybe for some agreements, for things like this, I would absolutely make sure you are consulting with a business attorney who you trust. And it's going to have to be somebody who's familiar with these SBA changes, phantom share agreements, because like I said, not every attorney is up on this stuff. It really depends. The one thing I do want to mention that I said I would come back to, these rules only apply to new applicants for SBA loans, unless if you're an existing business and you plan, did I say this already? Now I feel like I said this already. So maybe I'm being redundant again. But if you plan on going back and applying for a loan for working capital or equipment or new build outs to your space, some of those things that Brent highlighted earlier, then they are going to apply this new rule, these new standards to your ownership group. And there is a 6-month look back, which means you're going to have to make any changes to your ownership group at least 6 months out. And as you were talking, Brent, I was thinking we could almost do like a whole nother seminar on this. Because I'm not sure exactly how that would work with, how flexible the SBA would be with changes within the ownership group to be in compliance with these new standards. So that I haven't run into that yet.
Yeah, and I think you're right in your thought process, Jason, in that if there are changes to the structure of a business that already has SBA lending, then it's quite likely you're going to need to also make modifications to the existing structure of the notes that are already out there.
So that's the extent of my presentation. I see there's a couple questions here in the chat. Is the purchase of multifamily subject to SBA loans?
I can take that one. Yeah. So unfortunately not. The scenario of it being multifamily, it's more residential in nature and wouldn't be operated out of like a business space. And so unfortunately it would not be suitable or eligible for SBA financing.
And then we have another question here from Mr. Ramirez. How would a business know of any potential phantom share agreements of the business they are acquiring so that they know it is being honored and doesn't cause them potential future liability? That's a very good question. There's two ways. One is that these are the types of agreements that should always come up as part of any due diligence process between a buyer and a seller. Whether hopefully you're working with an attorney. Again, I know people don't always incorporate attorneys into those kinds of transactions. They absolutely should, because I can't tell you how many horror stories end up at my doorstep, and you end up incurring even more fees and a messier transaction because you didn't consult with attorneys. But if you have attorneys involved and the documents are written well in the purchase agreement, this should absolutely come out during the due diligence process. And on top of that, you should, in most cases, it also depends on whether you're doing an asset purchase or a stock purchase. If you're doing an asset purchase, then any kind of liability like this would not extend to your new entity that's purchasing the assets of the company. So it also depends on the structure too. And I think that in most cases, I think most attorneys, I think most bankers, I think unless there's a very specific reason why you want to do a stock purchase agreement, most of the time you're going to have those professionals advising you to do an asset purchase agreement, so you're not exposing yourself to potential liabilities like this. Anything else? Any questions?
Now, Jason, I do have one question, and this is for Brent. As I listen to Jason's presentation and the new rules in SBA loans in terms of citizenship, and connecting that with my knowledge that we do have business owners that don't have citizenship. This only applies to SBA loan backed up products, right? But banks do have products that are not SBA loans SBA backed
Yes.
up products that are available for these owners that might not have that requirement of a citizen. Can you talk a little bit about that, Brent?
Yeah. So, and thank you for the question. It would definitely be more of a conventional lending is what you'd be looking at. So oftentimes conventional lending, would allow for, someone who, is got a visa or, typically someone at least that has like a social security number, tax identification number, something like that, right? That makes them, more eligible for a conventional loan. And so, a bank would have conventional lending options, kind of what we're talking about with the permanent resident status is really going to be more for the SBA and government, guaranteed financing. But yeah, there would be potentially conventional loan options, and they could work with a borrower who doesn't have their green card or something like that.
Yeah. Okay. Thank you. And Jason, I think there is another question there on the chat for you.
Yeah, thank you for the question, and it's a good question. It depends on the level of scrutiny. Sure, a janitor with a large salary or massive bonuses, and I'm not suggesting that we in these documents that's what we do is have this person as a janitor. You still give them very professional title, very professional roles and responsibilities, and so you can still justify that, hey, they don't have managerial control, they're not handling the finances, they're not signing off on contracts, but they are extraordinarily valuable to our organization because they do X, Y, and Z, and they do it very, very well. And so I think that if the documents are written well, I think that they will stand up to scrutiny. Yeah, don't make it just a janitor, which I know you're saying tongue in cheek. But unless you get to a real level of scrutiny, that I just don't think would occur in most cases, you should be okay with these documents. And again, they have to be written properly. So, thank you.
Okay, I think we have, a couple minutes. Maybe anybody else who have anything else to add or any questions on these topics, just please go ahead and feel free to do. I in the meantime, I just want to thank Brent and Jason to be with the Latino Chamber of Commerce along with Luis OLVERA today for this webinar. I think the idea of sending this information out to the audience, to our members, is so important so they can be ready and they also can have a good understanding on what the latest trends, especially on that piece of the citizenship that Jason was talking about, and how that will impact any plans for business owners that are not included or don't have that citizenship requirement. And that is something that recently has changed, and we need to keep an eye on those things. So thank you so much for sharing all this information, and that will really save time and process time. So our business owners don't have to just go to the bank and be rejected. They already would have this information. We will be posting the recording of this webinar on our website, and most of our members will have access to it. So hopefully, a few additional members will be able to grab this information. Luis, do you have anything else that you would like to add?
Yes, first of all, I really appreciate very much, Brent, Jason, all the wealth of information that you shared today with us. I am, as Fabio commented, a commercial realtor, and believe me, you gave us a lot of very valuable information, especially to be proactive and prevent, as you said, Jason, horror stories, no? I have also had my little part of horror and terrible stories when the water goes up to here, and that's the moment that people go and ask for help instead of preparing themselves, having a lawyer on the side, having a reserve for legal, and then going downhill and cross the finish line smoothly. So this is really very, very important piece of information that all the members and all the Hispanic community especially, and everybody that is willing to learn a little bit about SBA should be acquainted at least of these new rules and regulations of the SBA. Again, thank you very, very much, Brent, Jason, for this information. And I hope this is not going to be the first nor the last time that you guys will participate actively in the Latino Chamber of Minnesota webinars. Thank you again. I really appreciate your presence.
Thank you as well.
Okay, thank you so
Thanks,
much.
everyone.
And yeah, thank you. Okay, bye.
Thank you very much.